being a
of Let's Learn Japanese Candlesticks Pattern. My name is Fred Tam and I will be your speaker today. Before we start, I would like to do a sound check, okay, so that I know if you can hear me. So guys, if you can hear me, please type on the chat box, clear? Okay, so can you do that, please? Let me just have a look at the chat box and see whether you can hear me. All right, thank you very much. It is clear. And I see people are coming in already, okay? I shall not wait for the full number before we start, so we are going to start immediately now. So once again, thank you, sir. Thank you very much for tuning in, and thank you for the opportunity to share with you this ancient technique of market analysis. Let me ask you a question. How many of you are new to candlesticks? Can you please type on the chat box there? How many of you here, first time only you heard of Japanese candlesticks? Okay, I was like you decades ago when I started. All right, so if you're new, just type new. How many of you here got 1 year experience? All right, so I don't see any new, so I can guess that you guys have some knowledge of candlesticks, yeah? New. I see. Somebody saying new. Fine. 1 year experience, yeah. 1 year experience, that's fine. And how about those who got more experience, a bit more? 5 years? 5 years? 5 years experience? Huh? Okay. Now, the answer is this, basically. Actually, it doesn't matter if you're new to candlesticks or you are an expert, because this technique will teach you how to buy low, sell high. Remember, that's what this technique is good for, excellent for. What is it for? To buy low and sell high. In other words, to win the battle of the markets. Every day, you're fighting a battle between the bulls and the bears, right? And who's winning the battle? Japanese candlesticks will tell you who is winning the battle. Okay, that's going to be very exciting. But before we start, I'd like to read to you our disclaimer. This talk is for information purposes and educational purposes only and should not be construed as a solicitation to buy or sell stocks mentioned herein. The speaker or his staff may have positions in these stocks. Trading involves risk of loss, including principal and other losses. If investment and other professional advisors are required, the services of a licensed professional is to be sought. Okay? Today's talk contents will be as follows. There will be 8 chapters in all. Chapter 1, I thought a bit about the historical background behind candlesticks, okay? How old it is compared to another technique of charting, which is the Western technique. This is the Eastern technique. And chapter 2, what are the 8 reasons why Japanese candlesticks are so popular? They're very, very popular right now, even when they were 300 years ago. And so why? Chapter 3, how to construct and interpret a candlestick chart. Chapter 4, reversal and continuation patterns. Like Western patterns, the East also got same thing, reverse or continue. So what is called reverse? What is called continuation? I will touch a little bit about it here. The strength and weaknesses of Japanese candlestick. Okay. It's chapter 5 and chapter 6. We do 2 exercises just to test your knowledge. And number 7, other advanced techniques. And then we are ready for the Q&A. There you go. So let's start with chapter 1. Let me start by sharing a little bit about the history of technical indicators. Now, what you're looking at is a technical analysis time map depicting the famous inventors of excellent indicators and systems throughout the ages. From the 1700s, I don't know if you can see the pointer, so maybe now you can see. Notice, so from the 1700s to the Quan Age, which is where we are today. Notice where Japanese candlesticks stand. They are on the left-hand side. So when was this discovered? So therefore, they should be the one that is first discovered, okay, and not what's coming after that. So Japanese candlestick was discovered in 1700s by a very famous trader by the name of Munehisa Honma, who used it to trade the rice markets. So this is the image of him, and he is known as our father of candlestick charts. Now, he was considered to be an elusive and very fearless trader because of his effective trading methods of candlesticks. And he is believed to have achieved more than 100 consecutive winning trades. His highly effective trading methods gained him the nickname of the God of the markets. I mean, in Cantonese, they would say Wu Wong. Right? And he was a legend, became a consultant to the Japanese government, and was given the title of samurai. Now, so that was the Japanese. The Western bar chart, by comparison, was discovered much later. How much later? About 100 years later, about 1890s, by a gentleman by the name of Charles H. Dow. Charles H. Dow. And he was acknowledged, and he still is acknowledged to be the father of Western technical analysis. So, which was earlier? Japanese candlestick discovered first or the Western bar chart? The answer is the Japanese candlesticks were discovered first. And then only come the bar charts. Now, have you heard of moving averages? Some of you who are not so new would probably have heard of moving average. Did you know that the moving average was discovered in the 1900s by a person called Hooker? And then comes, after that, the discovery of chart patterns by Richard Schwabacher. Okay, chart patterns, I talk a lot about it. I've written a book, which is a bestseller on it, chart patterns, and that was discovered in the 1930s, a bit later than the Japanese candlestick chart. And so, besides Schwabacher, then during that period of 1930s, there are people like Dewey who discovered cycles. You've got Wyckoff who discovered the Wyckoff method. You got W.D. Gann who discovered the Gann method. And you've got Elliott Wave who discovered the Elliott Wave. Those all happened in the 1930s after Japanese candlestick. And in the 1960s, Richard Donchian discovered the Donchian channel, the famous 4-week rule. And then Richard Dennis discovered the famous turtle system, both of which we are using extensively. And we've also got George Lane, who discovered stochastics. We got Gerard Appel, who discovered MACD. We have got Wallace Welder Jr., who discovered RSI, and so on and so on. And even up and Bollinger Band, who discovered Bollinger Bands. Now, all these were the Western ones. But look, as you can see, it was the Japanese who first discovered charting, not the Americans, and they were using it to trade the rice markets. And yet, it's not known outside Japan until an analyst by the name of Steve Nissen, this is Steve Nissen, and he published the book bestseller called The Japanese Candlestick Charting Technique. So here's a picture of Steve Nissen and his famous bestseller, written in 1991. Okay, this name is famous. You will be reading and seeing his name appearing over and over again. So it is now 31 years since his book was first published, and yet still so few traders know about it. So even amongst you, just now I said, hey, have you heard of candlesticks? You haven't heard, right? So you didn't know about it. So why should you learn candlesticks? There are 8 reasons why you should, and I will share with you a bit later. But now, let me tell you a little story about my journey, how I got involved in Japanese candlesticks. Now, ladies and gentlemen, this is Steve Nisan. I got to know Steve Nisan through another friend called Mr. Gary Wagner, another chartist in 1995. And after speaking to Wagner, I knew through Wagner that Nisan is the sole authority when it comes to Japanese candlesticks. And so I decided to fly to New York to pay him a visit and invited him to Malaysia to give a talk on Japanese candlesticks. So I succeeded in convincing Steve Nisan to do that. He came to Kuala Lumpur. He taught candlesticks in the Crown Princess Hotel in 1996. On the right, you see a photograph of me on the left and Mr. Nisan on the right and a student in the center. And can you believe that? After I learned Japanese candlesticks from him, I realized that he's superb when it comes to catching market tops and market bottoms and turning points. That I spent the next 5 years researching on it and then came out with this book. And this, ladies and gentlemen, the Green Book is my first book on Japanese candlesticks. And you know what? Because by that time, I was a friend already of Mr. Nisan. I wrote to him and said, hi, Mr. Nisan, would you mind endorsing my book for me? And this is what he said. Fred Tam's new book is a welcome addition to the field of Japanese candlestick charting. This book has the same attributes as candle charts. They are clear, concise, and give powerful insights. Whether you are an expert or a novice, this book will arm you with the weapons needed to help you win the battle of the markets. Steve Nisan, author of Japanese Candlestick Charting Techniques and Beyond Candlesticks, and ladies and gentlemen, he endorsed my Green Book. Thank you very much. All right, and that's my journey into candlesticks. And ladies and gentlemen, this book, which is I revised about 15 years later, and was published by John Wiley. I wrote to Mr. Nisan, and I said, Miss Nisan, I have wrote another edition. Would you mind to endorse it? And would you mind contributing a chapter to it? And he contributed a chapter to this book. So that was my journey, my story, as to how I was inspired to write, to teach, and now I trade the markets using Japanese candlesticks. Ladies and gentlemen, I promised you just now to tell you why is Japanese candlesticks so popular. And here are 8 reasons why. Reason number 1, Japanese candlesticks, they are leading indicators. What do I mean by leading? Leading means it can spot turning points faster than the other indicators. It can spot market turning points faster than the Western indicators. That's what is called leading indicator. Western got leading indicators, but their leading indicator still is a lagging indicator when compared to the Japanese leading indicators. Why? It's because when you're analyzing Japanese candlestick, you are analyzing the price. You are analyzing the psychology of the players that play the stock or the market. And so the psychology, when it change, the price change, the psychology change. And you can know straight away that the market sentiment has changed through the changing of the price. And so this is what I mean. Now, here on the left, you see an example. The price rallies and it's going up. But let me put it this way. No stock will go up forever without a U-turn. There will come a point after which there's no more buying anymore. There are no more suckers, okay, to take over from the last sucker, and so the market crash. Now, how do you know that's the market top? How do you know that the market has stopped? My answer is Japanese candlesticks will tell you that the market or the stock has stopped already. There is a change from a buyer's control to a seller's are now in control. You better exit and get the hell out of the stock. And Japanese candlesticks can tell you that much faster than the West. Right? So for that reason alone, it's worthwhile to stay for the next half an hour to learn more about Japanese candlesticks to spot turning points. What about the other way around? Market crash, right? Like what the market has been doing to us the past couple of months. And guess what happened? Then Mr. Anwar became the new Prime Minister of Malaysia and the market made a U-turn, isn't it? And that if you can catch that V, that's a lot of money you can make. ASB is a good example, right? So I'll come back to this. The change in psychology, no, like I say, markets don't go down forever. There will come a point where they'll make a U-turn. But do you know? Do you know they're making a U-turn? The answer is Japanese candlesticks can tell you. So here you are looking at a live example. This is what Japanese candlestick can do. Can spot turning point. Like this is a bearish engulfing, which is a bearish reversal signal. After a sharp drop, okay, then you can see, if you understand candlestick reversal, there will be a buy signal there, and then a sell. Every turning point, there will be some sort of a Japanese candlestick reversal signal if you know how to spot them. Your trick, your job as a trader, as an analyst, is to spot this U-turn. U-turn from down to up to down to up to down to up. That's basically it. And there are one candle pattern, two candle patterns, three candle patterns, multiple candle patterns. We'll come to that under the category, the chapter on reversal patterns. Let's move on. The second reason why Japanese candlesticks are so popular, okay, is because it allows you to buy low, sell high. This is a corollary, okay, of number one, right? So it allows you to buy low. Who doesn't like to buy low, sell high, right? That's the secret to making money from our markets. But how low is low and how high is high? Japanese candlestick can tell you. That's the beauty. The reason number three, why candlesticks are so popular is because it's very pictorial. What is called pictorial? That means it paints us a picture so that we can remember the picture. We will remember the pattern. So, for example, so the pattern of shooting star, right? It helps us to remember, okay, what is the name, the pattern all about? And you have names like shooting star, names like hangman, names like hammer, names like inverted hammer. We straight away, okay, you remember the name, you remember the pattern. And there are four reversal patterns here that I'm just talking about. Number three, Japanese candlesticks, the reason why they're popular is because you can either use it as a standalone or you can use it in combination with Western indicators. Standalone, it already works. But if you combine it with Western indicators, that can tell you the direction of the main trend, and you trade the Japanese candlesticks in the direction of the main trend. So it is much more accurate. So, for example, because the Japanese candlesticks do not tell you the direction of trend. It just tells you market top, market bottom, market top, market bottom. But is it a bull trend or is it a bear trend? The Western technical analysis comes in and help. And a moving average is one of the best. And you're looking at that moving average drawn over a price of a stock, okay? And you have got, then you apply Japanese candlestick technique. Using the price as a to determine the primary direction, using the moving average to determine the direction of the trend. Now, the fifth reason why candlesticks are so popular is because it can be applied to any time dimension. What do I mean by that? It can be used for short-term trading, in which case you go down to the 15 minutes, you go down to the 5 minutes, you go down to the 1 minute, all of which Japanese candlestick techniques are applicable, or you can apply it for long-term analysis. Again, medium to long-term analysis. Medium means the daily chart, and the long-term analysis would be the weekly and the monthly chart. So they can be applied for any time dimension. And the reason number 6 why they're so popular is because they're flexible. What do I mean by that? Well, flexible in this sense. You can use, once you learn candlesticks, you can apply candlesticks charts to trade any markets that you like. This is the same of all techniques. Once you already have learned the technique, you can use it to trade any markets that you like. For example, crude palm oil, for example, stocks, for example, gold, for example, stock index, crude oil, foreign currencies, bitcoins as well. And second last is it provides stop loss to protect against capital losses, as well as it is time tested. So these are the 8 reasons why they are so popular today. Especially the first 2 reasons are the most pertinent reasons why you should be migrating to Japanese candlesticks and learning more about Japanese candlesticks. So let's move on to the next part of our discussion today, and that is how do you construct and interpret a Japanese candlestick chart. Okay? Now, the word candlestick is a Western word that is coined by Mr. Steve Nissen. In Japanese, it is known as Roshuku Ashi, which literally means candle foot, not candlestick. The reason why it's called candle foot is because a person who walks barefoot in the sand will leave footprints behind, right or wrong? And so if you follow the footprints, you will know where the person is going. So same thing with charts. If you know how to follow the Japanese candlestick chart, then you will know where the market will be heading. Okay? So how do we construct a Japanese candlestick chart then? The answer is you need 4 points. What are the 4 points? The open, the high, the low, and the close. So let's learn how to construct the candlestick. Step number 1 is to mark the open and mark the close. Mark the open and mark the close. So let me just, okay. Hold on a minute, huh? Let me just get the pen. This is the pen. And then over here, mark the open, right? Mark the close. I've just done that. Okay? Can you all see that? Okay, mark the open, mark the close. Step number 2, box it up. This is how you box it up. you box up. And this rectangular box is called the real body, the body of the candle. So there's a low open and there's a higher close. So you join high to box. Join high to box. That's step number 3. Join the high to the box. Step number 4. Join low to box. Join the low to the box. And step number 5, if the color is green, now if the close is higher than the open, color green. And since the open is lower, the close is higher, you have a green color. Now, you know why it's called candlesticks now? It's because it looks like a flame, and that looks like a wick, a candle wick, and this looks like the body of the candle. Okay? Now, let's complete the steps. Step number 6. What if the close is lower than the open? So instead of closing high, you have a close that is low over here, lower close, higher open. Then you will have a red candle, a red body. So in Japanese candlesticks, there is color to differentiate between, on that day, are the bulls winning the battle or the bears are winning the battle. Green color means the bulls are winning the battle. In other words, the buyers are winning the battle. And the red color means the bears are winning the battle. Like that. Now, reading and interpreting the single candle, okay, marks the beginning of candlestick analysis. So we start off with analyzing and interpreting a single candle. In candlestick analysis, there are basically 4 single candle types. One, what's the purpose? The purpose of identifying the single candle is to understand the player psychology behind the formation of that candle. And basically, who is in control. So over here, we have a green candle. A green candle means what? If you can remember, open low, close high. So that means to say the buyers are in control. So the color tells us the story of who is in control. Green means bulls are in control. Red means the bears are in control. So on the left, you see a green color candle, you see one, that means the bulls are in control. Now the other thing about candle analysis is the size. It's important to know whether this is a small size or a big size. What if the market opens here and then rallies and closes there, over here? And if you box it up between the opening and the closing, you get a green color candle that is twice the size that of the first candle. Which is stronger? So in that sense, so you look at the size of the candle. Obviously, this candle with a long range that is double that of the previous range between the open and the close is a stronger candle. Now, on the other hand, a red color means the bears are in control. The sellers are in control. So over here, the closest is here, the open is there. And so when you have a red candle, that means on that day, the sellers are winning the battle. Okay? And the third candle is that of no real body. Okay, there is no real color. It's open and the close is about the same price. So the market starts here, drops over there to make a low, pull back up to the high, and then comes back down. It goes ding dong, and nobody winning the battle. Now, this third type of candle is called a doji. The Japanese calls it the doji. It means the market is undecided. Neither the bulls are the winning, nor the bears are the winning. And so, like Mike Tyson winning one round in the boxing match, and Holyfield wins another round in the boxing match, and it is 1-1, which is a draw. Okay, so when you have that, it means the market is undecided. The next day, you wouldn't want to buy anymore if you're a buyer. If you're a seller, so you're not very sure where you're a seller. You just do nothing, and you look at the next candle to see whether it's continuing the trend or it is reversing the trend. And lastly, another market indecision candle is the umbrella group. It is something like a cross like that, but that there is a small body here. That's all. And it's something like a hammer like that. Right. So this type of umbrella group is also a sign that the market is undecided and doesn't know whether it should be going up or down. But if you see this type of candle at the top of a market, that means it's probably going to correct, pull back. If you see this at the bottom of a market, it is probably going to rebound. So it depends on the location. Let's continue with our discussion. And so if you keep plotting every candle every day, yeah, and you get a Japanese candlestick chart that looks something like what you're seeing here. Okay. And let's now move to another chapter, which is reversals and continuation. Now, some of you here maybe have already learned about Western chart pattern analysis. And if you do, you will know that in Western chart pattern analysis, you've got reversal patterns as well as continuation patterns. Reversals, there are 8 of them. Continuation, there are 10 of them, right? So in Japanese candlesticks, they also got reversals, you also got continuation. But there are 4 categories. And let's look at the first category. There are some candles that are just based on one candle, you can know that the market is reversing. That is the best. Because this is the most, what they call leading of all indicators, is when just one candle will tell you that the market has reversed from up to down or down to up, and you can make the necessary move, okay, to protect your position or to enter a position, that sort of thing. So example of single patterns are hammer, hangman, shooting star, inverted hammer, doji at the bottom, doji at the top, etc. So we have one candle patterns, and they are best used to catch reversal, up, down, up. We have double patterns, like bullish engulfing, bearish engulfing, dark cloud, etc. You've got triple patterns, which is like morning star, evening star. We have abandoned baby, doji, star, and you have got multiple patterns as well. They can tell you whether the market reversing, like concealing baby swallow, like ladder bottom, like 8 to 10 new price highs, etc., etc. So you might ask, then why do we want to learn these Japanese candlestick reversal patterns? The answer is it can help us to catch market tops and market bottoms. For example, right, the market is going up. Okay, it's going up and up and up. It's not going to last forever. There will come a point where there will be a change in the psychologies. Instead of the bulls in control, the bears are now in control. And so there will be one candle, 2 candle, 3 candle, Japanese candlestick right at the top there. That can tell you that the market is reversing. A good example was in July 2020 during the glove rally. It went up too fast and there was a change in the psychology from pull to pair. And if you're not careful, then you would have been already still holding stocks right at the top. Japanese candlestick would have helped you to exit at the top. And when it comes back down later, Japanese candlesticks can also help you to catch market bottoms. Let me give you an example. K-Power. This stock at one time was a darling. It went up all the way here, and then suddenly it made a U-turn, a V-turn. How do you know that now the bears are in control and the sellers are in control, and that you should be getting out? The answer is Japanese candlesticks. If you know candles, you would be able to see that there is a dark cloud cover there. You'll be selling at the top, buying at the bottom, selling at the top, buying at the bottom, selling at the top, at the same time, you buy at the bottom. That's what Japanese candlesticks are excellent for. So there are 7 popular patterns that I'd like to share with you. 4 doubles, 3 singles. And even if you can memorize and try to understand these patterns and apply them in your trading, you would be more accurate in your entry and exit. Now, there are 7 here. 4 doubles, 3 singles. What are they? Bearish engulfing, F-thumb bearish, which is basically one black crow. And then you have got bearish around, you have hangman, you got dark cloud cover, shooting star, and doji at the top. Now, today, I'm going to share with you 2 patterns, the bearish engulfing and the shooting star. You're looking at the bearish engulfing. This is a bearish reversal pattern. So let me just draw. Let's start off with a rally. It starts off with a rally. Okay. So you're white. Now, sometimes it is white and black. Sometimes it is green and red. Okay. Depending on the software. So in this example, we are using white. So you imagine that in other software, the SI station that we use, it is green. Okay, green means on the way up, or close higher than open, and red is when the close is lower than the open. So first of all, starts off with a rally, strong close, next day gap up, but it came there all the way down to close lower than the open. So here you got a situation where the black engulfs it into the white. So we call this an engulfing pattern. But because it is a black or it's a red, engulfing into a white, or a green, that is a change in the control. From buyers in control to sellers in control. This kind of stocks, it is reversing, and that is a sell signal over here. So aggressive, okay, you will already sell there already at close. If you are conservative, you wait for one more candle, it continue to go down, that would be a confirmed sell signal. And if you do that, you would have saved yourself, okay, from a sharp drop. In this example, in HLT, which is on the 2020, this is what happened. It rallied so sharply, gapping up all the way, green, catch all the buyers, and then suddenly snap, and it came all the way down, and it engulfs the previous, it engulfs, okay, the previous day's green color, and if you do not exit this stock, see where it went. It went down all the way, okay? And that's how tricky and dangerous stock trading can be if you are trying to trade a volatile stock like this. You better know Japanese candlesticks, entry, exit patterns, right? The second pattern that I'd like to share with you very quickly is the shooting star. Shooting star is a one candle reversal pattern. Now, it starts off with a rally, and then it opens right there and then shoots. So the buyers will push it up all the way during the day. But if it closes there, that's fine. That means it's still strong. But at the end, the trouble with the shooting star is, okay, it shoots up to here, and then the end of the day, it comes right down and closes near the low of the day. And so you've got a long upper shadow on top, which is telling you that a lot of buyers are caught at the top. And many of them not willing to cut your losses, not willing to let go. They want to see tomorrow, whether tomorrow will be a better day so that they can cut off a bit lesser loss. And it turn out that it's not so. And but still, they kept out, giving them no opportunity to cut the losses. And they will end up holding on to this stock right at the top of the market. Okay, so if you understand about shooting stars, okay, about single reversal patterns, you would also want to reduce positions when you see one. Okay, let me show you the example. This is VSolar. You see that on the way up, all the way, fine. No sell signal. You can see all the arrows are buy. Then guess what happened? And there's a shooting star on that day. When it went up from 35 cents to 45 cents, a long upper shadow, and came back down again to close at 35 cents. So you bet. Can you see that a lot of buyers are caught at the top? And that's it. It collapsed after that. Hold on. So it collapsed immediately after that. All the way down, giving you no chance to exit. And you should have cut loss over here. That shows the danger of trading on volatile stocks and you do not know about Japanese candlestick reversal patterns. That is really a high risk situation, and shouldn't be entering into volatile stocks like that. Let's move on. The other side of the coin will be the bullish side. And why do we want to learn that? It is to catch an early entry into the trend. In this example, which is, I think you guys are familiar, if you're in 2020, this was the start of the pandemic. But before the start of the pandemic, when we had a problem with our politics, the Sheraton move and all that happened here. All the way it dropped until over here, and somewhere around, some of them, Muhyiddin assumed the premiership, went down further. Okay, there was a locking down, okay, of our economy, and it came down even further before the 1 trillion budget plan to refloat the economy, okay, and the reduction in the interest rates by Bank Negara caused the market to stage a stunning rebound. And you know what caught it? The engulfing bullish caught it. Caught the bottom of this market. That's how fantastic this knowledge of this indicator can help you to get into the market much earlier than others. So I'm sharing with you 7 popular bullish reversal patterns that can help you to catch market bottoms, right? Double patterns, there are 4 of them, and there are 3 single patterns. I shall share with you 2 patterns for today. And they are the dump, the reversal, the bullish engulfing, and also the F1 bullish, which is basically a 1 white soldier. This is a bullish engulfing, which is opposite of a bearish engulfing. So all the way down, okay? And then there's a change in the psychology of the players. Suddenly, from the bears in control, to the bulls in control. And how do you know that? Change in the colors and also the white engulfing the black. If it is SI station, it will be the green engulfing the red. Okay. Right. If you are conservative, you would buy with confirmation. If you're not, you would have bought on the earlier candle. Earlier candle over here, your stop loss should be placed below the low. Same example, okay? Just to show you one more time, they're bullish engulfing. Aptam bullish, which is the one white soldier, okay? That's a bit slight different from the bullish engulfing. Instead of opening lower and push to close higher, this one in the one white soldier, it just opened higher but closed higher. That is equally bullish and is a buy signal. Conservative, you would trigger a buy or confirmation. If you are aggressive, you would have bought earlier. Here is the chart example in CPO. You would have caught it at the low. Okay, ladies and gentlemen, every indicator have their strength and have their weaknesses as well. Okay, so I will have to be fair. I'll reveal you the strength. What were the strength of the Japanese candlestick? I was telling you the first two of the 8. It's already worth learning. It is a true leading indicator and it can spot reversals faster than the Western. The one candle reversal and the two candle reversals are one of the most important patterns that you would like to learn. Okay, and they are work best in sharp declines and sharp rallies. Sharp drop, and then it makes a U-turn like that. You would have caught here, or a sharp rally, and then makes a U-turn like that. You would have caught your selling here. You would have bought at the bottom here and sell at the top. That's what Japanese candlesticks are good for, but best for, and that's what they should be used in. And because it allows you to buy low and sell high. Buy low, sell high. But the weaknesses of the Japanese candlestick is in a sideways market. They are no good. Right? You will get hit. Right? Buy and then sell off again. As you sell, cut a loss, then it goes back up again, and you can buy again, and there's a sell signal, you sell again. And so you get whipped because it is in a sideways market. They tend to give you premature signals. How do you overcome that? Here is a suggested way where you can overcome this weakness of the Japanese candlestick is to use support resistances, just draw through trend lines. If it doesn't break above or below, do nothing. Trend lines, support resistance, even chart patterns could be used, Western chart pattern could be used to supplement the weakness of the candlesticks. Okay? We have come to nearly the end of this discussion. And I hope that you have been following, guys. Right. Let me have a look. Okay. Now I would like to give you some exercises, and then you let me know through the chat box whether you can answer them correctly. So name the chart pattern correctly in these two exercises. This is an uptrend. Market came down, made a rebound. And so there was a buy signal there. My question is, what is the name of the pattern? One candle pattern that should be triggering a buy signal. Well done, Mustafa Kamal. You are absolutely right. is a hammer, and the second one on top. So the first one is, you're right, it's a hammer. But the second one, you have you call it a shooting star. That's incorrect. A shooting star, you turn upside down, that's a shooting star. This one is like a hammer, but you see at the top of the market. That's a bearish signal, and it is not, as somebody said, Nick Lai said hanging man. That is correct. So you are correct, Nick. Well done. That's a hangman. Morning star, sorry lah. A morning star. Yeah, you thought it was a 3-candle pattern. Fine. Now, if it's 3 candle pattern, is also not morning star. So one exact says morning star, bearish engulfing. Okay, your number one is morning star. Okay. Yeah, that's not wrong too. Morning star if it is a 3-candle pattern, it's a morning star. If it's 1 candle pattern, it's a hammer. Okay. Hanging man. So I see you got an idea. You get an idea. Not too bad. Well done. Those of you who are participating. Let me give you another example. 2 examples and we are done. And then just test you all to see whether how much you have absorbed in my session. So name the chart patterns correctly. So we have 2 here. The one is on top. This one is a bearish pattern. And this is a bullish pattern. This one. Okay. Both are 2 candle reversal patterns. And no continuation patterns here. We didn't discuss that. The reason why continuation patterns are not discussed here is because Japanese candlesticks are excellent for reversal. Continuations, no, not so. But still, there are not many patterns in any case. And we shall teach that in the advanced class, right? But not in this session. We just concentrate on reversals. So, give me some answers. This HLT, rally, came back down. So what is the name of that pattern right up there? Bearish engulfing, according to one example. That is absolutely correct. Bearish engulfing, Mustafa Kamal said that is absolutely correct. Okay, that is absolutely correct. Bearish engulfing. And the other one? One white soldier, that is absolutely correct. Steve Shaw. Yes, well done. Bullish piercing, not so. It's actually gap up and close higher. It is Fred Thumbs bullish or one white soldier. All right, well done, guys. Well done. Now, the other advanced techniques that you can apply to candlesticks is to make it more accurate, is to put an indicator underneath the Japanese candlestick chart. Put an indicator underneath like this, right? In this example, I have put an indicator which is stochastic, for example, underneath the price, so that when you have got a bearish engulfing, you also got a sell signal on the Jap candlesticks. And that would confirm, okay, that it is overbought area, and therefore the sell signal is should be given more weight. Given more weight. Vice versa over here, buy signal. Should be a buy signal because the stochastic is oversold. So you can use, and definitely should use, a oscillator, some oscillator to help you there. And stochastic is one of them. RSI is the other one of them. Larry Williams, etc., etc. Okay. All right. So, if you want to learn more about Japanese candlesticks, then PCFTA is the right course for you. Because in that PCFTA, which is a 3-month course, you will learn 13 powerful modules to enhance your trading strategy. What are they? Number one, an introduction to technical analysis, okay, philosophies and all that. Then we have chart pattern analysis. And then we have moving average. Oh, these are very useful techniques. Right? Then we have got technical indicators and oscillators. Stochastic is one of them. MACD is one of them. RSI is another one of them. And then we have advanced Japanese candlestick charting over here. We go over Japanese candlesticks again, okay, at a more advanced level. Elliott wave principle. We're going to teach you about Gann principle as well. A little bit on Gann, I would say. Time cycles, yes, so you get an understanding. Cryptocurrencies, okay, and money management. You learn about Heikin-Ashi. The other types of charting methods, like point and figure, 3-line break, Kagi Renko, things like that, market profile. We have point and figure as well, Ichimoku as well, in detail, the trading strategy. And for those of you who would like to take the UK exam, then we prepare you for the UK exams. And you know, we are the top school in that sense. Because we have the highest number of passes and distinctions. And let me just show you this. We scored 2 out of the 3 distinctions in the whole world. 2 came from our class, our school. Isn't that great? And 2 of them are Miss Jody Wong and Mr. Neo Tiong Hee. They scored distinction in both paper 1 and paper 2. Yeah, in paper 1, out of the 10 who sat, 6 got distinction in paper 1. So how good is that? And so if you join us, you will be assured that you are in good hands and your chances of passing and scoring distinction shoots up under our lecturer's guidance. So we have good news for you. We have got a Christmas promo on this course. So I'm calling those of you who are serious, aspiring technical analysts, teacher. If you want to teach technical analysis, you need a qualification like that. The diploma is the best there is, right? And you want to be an author like me, you need a qualification or qualifications at the back to show that you do have a good grasp of the theory behind all the indicators, behind what you're going to pitch. Yeah? And I'm calling all of you to join us. Note that our promo price over here is 18126, 18126. And this is good until 31st December. After that is 19080. Okay? So, yes, is there an installment package? Yes, there is an installment. The installment is for over 24 months or so, can. And then you only have to come up with 755 per month. That's all there is to it. So we make it very, very affordable. Is it really great? Is it good? Is it worthwhile to pay 18,000 for it? You bet. After that, you get called up. You go and write. You don't even have to write, people, but know that you pass the exams. The big brokerage firms will give you a call and say, "Hey, would you like to join us to be our dealer, to be our remisier, to be our this and that analyst and all that?" They will call you, right? And that's this. And then if you're a trader, definitely 108 for the 18,000 that you join us. Okay, you can make 110 times more, 180,000. Your fund manager, you can make 1.8 million, etc., etc. So hurry up, register now. These are our numbers. Please contact our customer care, okay, at these numbers. So please take a snapshot of it. And now, I'm glad, okay, that we have come to the end of my session on Japanese candlesticks, and I'm open to the flow for any questions that you might have. I'm going to take 3 questions, and after that, I like to invite one of our students, Miss Jody Wong, the one who's got the distinctions as well in the 2 papers, to say a few words as regards her recent success in obtaining that distinction. Okay? So we spend about 15 minutes with Miss Jody Wong, but right after the Q&A session. So those of you who's got any question, just type on the chat box below, and I'll try to answer that. And here are the PCFD, the 25th batch, the batch where 2 out of 3 distinction, Jody Wong and Mr. Neo, is on the top left. Both of them scored distinctions. And here we have Jody on screen. Hi, Jody. You are here early. Thank you for coming in to answer a few questions regarding your journey to success in obtaining a distinction in the highly rated Diploma in Financial Technical Analysis. But before that, I'd like to have a look at some of the questions that they have posed for me to answer. Okay, Mary, let me see what are the questions that they have posed for me. Before I get back to you, is it okay, Jody, you just stick around for a little while?
Hello, Mr. Fred. Yeah, okay.
Yes, can
Hello,
you?
everyone.
Yeah, I'll be with you soon.
Okay.
After I've answered a few questions from the floor, then we'll hear you. The secrets of success, okay, in obtaining the distinctions. Fantastic. Can you analyze Pentac? Yes, I can, but not here. I do not have that. Do you have? Okay, we can pull up Pentac. Okay, we can. Yeah, now can you just wait for a little while? Kearney and Lim wants me to analyze Pentac. So for that, I've got to pull out my SI station, and then I pull up Pentac. And besides that, okay, keep coming in with your question. I want a couple of questions. But meanwhile, I'm pulling up Pentac so that I can. So are you looking at the SI's screen? Okay, the price chart. Now we are pulling out Pentac for you. Okay. So I'll just type, okay, hold on a sec. I'll get Pentac. Okay. All right. So it's based on Japanese candlesticks. Okay. Can you see these drops? You see, here's one, right? So you need to trade the direction or trend. So when it pulled back and rebound, and it pulled back to here, so there is a piercing line confirmation pattern here. You've got some shooting stars there, topping out, okay, and then come back down again, and some doji. Now, unfortunately, it's so illiquid. Korean, so illiquid. Okay, it's not okay, easy to spot, but still I'm able to spot. And in conjunction with the trend, now we have a nice support here around the 50 moving average. Okay, although not in oversold, but you have got some support there, and you've got a kind of a bullish harami confirmation here. So we have a confirmation there, And this is the candle, all right? This is what we call you can say a bullish meeting line, a bit bullish meeting line confirmation. You have a nice buy signal here, and there's a breakout, and you just continue to hold. That's it. Right? So in terms of trend lines, it's in an uptrend. It's above the moving average. It's breaking out. Okay. The Japanese candlestick buy would be right here. Here's one, and here's one. Now, when do you sell? You're looking for a rally, and if there is a sharp drop, then, and if there's a sell signal, you could take profit over here. But right now, nothing. It's just beginning to rally. So it's just holding on to the stock Pantech. Okay, based on Japanese candlestick, based on pattern-wise, Western pattern, you've got a breakout. You've got a breakout of a wedge. But that one you are using another technique, which is chart pattern analysis. Okay, one more question, two more questions. What's the S-con of Japanese candlestick? Albert, what's con? Okay, I do not understand this question. I will move on to the next. For midterm trade, what duration candle should be used? Weekly candle. Midterm, in the sense of how long is it? Sure, I mean, hold on a minute. What's con of Japanese candle? I don't understand, Albert, that question. So I move on to Michael Chong. For midterm trade, what duration candle? Well, you can use 3 to 6 months here. Yeah, normally 3 to 6 months. Okay. Yes, you can use weekly. The weekly. So now, if let's say Pantech and weekly, all right. So can you see that the weekly candle is even better? We have a nice, wait, let me just clear. Okay, hold on a sec. Now this is a weekly chart, right? You need to trade it in conjunction with the trend as well. Need to understand that. So can you see that there is a clear breakout? Now it was trading inside a triangle. I'm afraid, okay, so you need to combine your knowledge in chart patterns with candlesticks. Now, then we have a bull divergence there. Can you see that? Okay. And a buy signal here, definitely. Hey, that's a F1 buy signal. And after that, if you put your stop here, even though it pulled back here, you didn't get stop out, right? Because your stop is here. And it continued to break, and there is a breakout of the triangle here. So you have a very nice rally going on here, Pantech. So weekly is even better because this stock is illiquid, right? And obviously it's not as exciting as those more volatile stocks, okay? But you know, so it is a buy hold kind of scenario. You move on to another stock while you're holding on to this stock. So you're not trading this stock, right? Here, another buy signal. So basically, yes, use a weekly chart. Will be clearer if you see that the daily chart, it is not so, it is choppy. Okay, then you move on to the higher time frame. One more. Is it okay? Disadvantage of candlesticks I just mentioned just now, Albert, it's in sideways market, okay, they chop you up. So you need to work with other techniques like the support resistance trend lines. Let me say that again, the secret to making money from the market is to trade an uptrend stock. Okay, uptrend. That one, okay, you just connect the low to the low. You got a higher high and a higher low. You got an uptrend. Okay, right. Yeah, we need to combine Western with Eastern. Please help to unmute me again. Sorry, hold on. Can you analyze PJ Bhumi? Jody, give me a couple of minutes more. I'll handle this question first, then I'll get back to you. PJ Bhumi. All right. Weekly is fine. It's good, right? It's breaking out. It's a nice rally. Let's look at the daily first, Very nice. See that? It's already broken out of this saucer on the rounding bottom over here. Now, this stock, because it has broken out, okay, you look for continuation patterns already. The reversal pattern, you look for Japanese candlestick, you look for a reversal. Is there any reversal down? If there isn't, just hold on to it until it rallies and it gives you some kind of a parabolic kind of move, and then there's a U-turn, and then only you start. You're talking about exiting now. And even exiting, you've got to be a bit wary that if the trend is very strong, the pullback can be just this, and then they continue. Okay, so you need to have a re-entry strategy here if you do get out based on Japanese candlestick. But there isn't here. Even Japanese candlesticks, so you don't use just Japanese candlesticks to do it, to exit. Because if you do, you've got a dark cloud cover confirmation that you sell over here. No. In short, sorry to say, in short, PJ Bhumi is in an uptrend, and the next target will be 106, okay, based on a 1-to-1. And right now, you do nothing but hold. Okay, with the stop loss here. All right. I hope that answers your question, and I'd like to get on with my interview with Miss Jody. Miss Jody Wong is here, and she's from OUB, OUB KN, and she's located right now in Kota Kinabalu. And I'm speaking to her. I'm from KL, and she's now in Kota Kinabalu. Okay, and I'd like to thank you very much for coming again on air. And I'd like to ask you, Jody, a few questions regarding your journey and your success in obtaining the distinction in the diploma of the financial technical analysis. So, question number one, okay? Out of all the courses out there, why did you choose the PCFTA? What were you looking for exactly?
Hello, Mr. Fred. Thank you for having me, everyone. First of all, I've attended other courses along the way in my trading journey. So I'm attracted to PCFTA because it's very comprehensive. Yeah, it teaches a lot of things that I do not know. So that's why I chose PCFTA.
Okay. And as well, yeah, you already knew it is comprehensive because we got 13 modules really, isn't it?
Yeah, I looked through, I was given the modules, so I'm impressed with what is covered in the course. Yeah. And the installment package does help a lot because, I could break it down into 12 or 24 months to make payment for this course. Yeah, it's a 3 months course, and I think it's worth every cent I paid.
Okay, question number 2. Before you decided to join PCFTA, was there anything that was holding you back? Any doubt?
For me, not really. I'm actually along the trading journey, I'm always looking to upgrade myself so that I could perform and improve my skills. So for me, this course actually comes at the right time. It is something that I'm looking for, so I decided just to give it a go, just like that. For me, yeah.
Nothing to hold you back. So also, of course, where did you hear about us? This is not inside this questionnaire.
I think I joined the one on the 25th in tech and started in January. I think I heard it in somewhere in November or December. Yeah.
From which advertisement? Was it Facebook that you saw us, or?
No, it's on Telegram. I was on Mr. Fred Tam's channel. Yeah. I do know that this course has been offered all along the way, but because I'm based in Kota Kinabalu, so I was not able to fly to KL to attend every single week. So for me, I think MCO is good because it made this course available online. So now we could take this course anywhere in the world. So I think that's a good thing for me. Yeah, so that I'm based in KK, Kota Kinabalu, I can still do it online and still learn from the course.
Okay, good. I want to I like to ask all 5 questions first, and then before, because some of the questions I want to ask you actually is inside there, so I might as well just ask you the question. So the question number 3 is, what did you find to be useful from this course? I mean, I know that you're in the trade. You apply that technical analysis, can I say virtually every day in your life, in your business, that kind of thing. So did this course help you out, in trading, for example?
Yes, it does. Before this, what I've learned along the way are all fractions of certain skills and technicals. So
a bit here, a bit there.
Yeah, a bit here and a bit there. I learned about some indicators. I learned about some candlesticks. Yeah, I've come across candlesticks. Yeah, here
but
and there.
You didn't jigsaw them together, right? And so
yeah,
this course...
I always feel there's something still missing. Yeah, so yeah. Although I have also read books, this and that, and practicing, I've been looking at the charts for a while. So I think this course actually brings everything together. I see a clearer picture, and it makes me understand chart patterns better and how to apply them into real trading. I think identifying the trend, whether it's up, sideways, or down, is very important in making trading decisions. As in, when it's a technical bounce, we have to get out at the resistance. Yeah, because it may just be a short bounce. But if we look for an uptrend stock, we could hold it as long as it's going up. Yeah. So I think this course kind of put everything together. So now I know what to look for in the chart and what to look for in the stock to buy and hold or to make quick trading and such.
Yeah. You mentioned about the importance of selecting uptrend stocks. I couldn't agree with you more. That to make money, uptrend stocks is the first consideration, and after that, we can apply Japanese candlesticks, to trade in the direction of the trend. Let's say jatuh, come down and do a V, and now when you turn back up again, we quickly enter, because the overall trend is up. So this sort of a lesson actually can be very helpful. Like you say, to trade in the direction of the trend is so important, isn't it?
Yes, indeed.
So what did you find to be useful? Okay, your favorite topic. I mean, okay, you mentioned chart pattern. How do you apply chart pattern in your trading?
Now I am able to identify, chart breakouts more accurately. Yeah, maybe from a wedge or from a symmetrical triangle. Yeah, or from a channel. Yeah, so all this actually helps a lot. And I'm able to estimate a target from the chart patterns.
Targeting.
I think that's another important feature, because sometimes we may have found an uptrend stock, but we may not be able to hold it long enough because we do not know where to aim, where is the target that we should aim for. So actually this course actually also teach us to anticipate a price objective, so we could hold it to maximize our profit.
Yeah. One of the strong points about chart pattern is that you can use to measure target. That is a very strong point in chart pattern. And I just now somebody mentioned just now Pantech. So we were analyzing that one, and PJ Bumi. These are all breaking out of triangles, and so we can apply actually what you studied into trading actually. So don't you think so? Like a very practical course to me.
Yes. Yeah.
So let me ask you the fourth question and then the fifth, all right? So that what are you currently doing now with the knowledge that you got from the PCFDA course?
Well, I apply my knowledge immediately. So whenever I look at the charts, I try to find a pattern. Organize a trading plan around the pattern. Yeah.
Let's say you found a pattern and there is a breakout now, okay? Like we saw in Pantech. How do you apply candlesticks to enhance your trading profit? Now it's already a breakout.
Well, the breakout, if it comes with volume, and if the candlestick is a full candlestick, that would be great, because that would be a strong breakout. Then I'll go for it. Yeah.
All right.
Yeah.
Green, for example, I think you mean a green candle, a strong green candle. Yeah.
Breakout with volume. Yep.
So understanding candles do help a lot, giving you more confidence.
Yes.
And if they continue to stay green, that's fine. That's and then until they turn and do a reversal in the form of maybe a engulfing bearish or something like that, right? So, let me ask you the fifth one. Who would you recommend? Okay, so who would you recommend the PCFDA course to? So number one is, are you fully satisfied first with this course before you recommend?
Yes, I am. Yeah, yes, I am. I'm happy to have studied whatever the analysts outside are studying. Yeah,
Okay.
so I have more confidence in my training
What
as well. Yeah, and
should
I would, of course, I would recommend it to all traders or anyone who treats investing and trading seriously. Yeah.
yeah, I think
Even if one is a fundamentalist, they could also learn this to find a good entry and exit. Yeah, so it's
mm,
actually an advantage, an added value. Yeah.
mm. So I so that question just now is actually quite redundant because whether or not you how do you find this course? I mean, what a question! I shouldn't be asking that because you got distinction. So you got distinction in both paper. So definitely you have excelled in this course, right? And if you have distinction, I'm sure you recommend it to someone else, right? Now, one last question. Uh, uh, your distinction. What is your secret? To getting distinction in paper one, and what's your secret in getting distinction in paper two? Maybe you like to share a bit. I hope you don't mind.
I don't think there's any secret. It's purely on, yeah, I read all the materials of the modules and recommended books. I understand them so that I don't need to really put it into my mind. I understand them so they'll stick to the mind. And I think the exams are really good because when we study for exams, we tend to put the time in and we tend to try to remember it. If we go to, I mean, for other courses, if there are no exams, we will just, attend and that's it.
Yeah.
We just leave it at that and we do not go through the notes again. But the exams are actually really good. Anyone who intends to take this, they should go for the exam because of the exam, we tend to study more, we tend to put it into our head more, so it will stick into our mind. And it will be handy when we are training, that these things are in our mind all the time. Yeah. So no secrets. It's just it's just to
Okay.
put the heart and study. Yeah.
The secret is, I think you are damn serious about it. When you sign up for the course, you already want to go all the way out, including paying the exam fees and everything. Willing to sacrifice the exam fees. You know what you want, uh,
Yes, and to learn so that I make money to earn back the course fees and much, much more.
are you that much more confident now after the course?
Yes, of course. Yeah.
Okay, thank you very much. Thank you. Now, guys, do you have any questions for Miss Jody? So I'm so thankful that I'm able to, convince you to come over on air and sacrifice some of your time for us. We are truly grateful for that. Miss Jody, thank you so much. For sharing with us your secrets, so to speak, which is not a secret, of how to obtain a distinction in STA. Now, you have proven that, of this Napoleon Hill's famous saying, which I use actually, and that is, he used to say, Napoleon Hill, whatever the mind of man and woman can conceive and believe, it can achieve. It can achieve, right? You put your mind to it, you can conceive it, you will achieve it. And that's what you did, you achieve it. And just now, and yesterday I saw this Coca-Cola what do you call it, tagline, and that is believing is magic. And so if you believe in whatever course you are going into, right, and you will be able to achieve it. And so that is the message, and that is what I want to share with you as well. So guys, that is all from us. Anything from you guys? Any more questions? Oh, no. Okay, no more. Then I'd like to thank you. Thank you very much, Jody, for your presence. And we wish you many successes in achieving your dreams.
Same to you, Mr. Fred.
Thank you.
Yeah.
No more questions. I want to thank you. for tuning. Thank you all for tuning on to this session. My next session will be next week, December the 7th at 1 p.m. to 2 p.m. And for another edition of Market Outlook and Stocks to Watch. Market Outlook Stocks. So thank you very much and have a nice day.